Welcome back, everyone, to Fundamental Toolbox, your premier destination for professional-grade market mechanics. If you've ever felt like the market does the exact opposite of what you expect the moment you enter, today's video is going to change your entire framework. Today, we're doing a complete breakdown on how to correctly deploy and read our custom COT Retail Positions Tool to trace exact crowd allocations, pinpoint high-probability trend turning points, and align your trading with the underlying structural flow of the market. Let's dive straight in. First, let's look at the group we are tracking, retail traders. These are individual market participants like you and me who deploy risk capital to capture profits from price movements. But unlike large multi-billion-dollar institutions, retail traders trade with relatively small accounts and carry practically zero individual influence on the actual price action. This causes retail traders to be highly reactive. They react to what has already happened on the chart. After major rallies, FOMO kicks in, and they flood the market with buying. After deep declines, panic takes over, and they commit heavily to the short side. Remember, we aren't talking about simple sentiment surveys or soft opinion polls here. These are actual positions placed with real money on regulated exchanges. By mapping this real money crowd exposure, we can identify when speculative positioning has reached extreme, unsustainable limits near major market turning points. To track these real money allocations, our custom tool pulls directly from the gold standard of regulatory data. The official weekly commitment of traders report, audited and published by the United States Commodity Futures Trading Commission, or the CFTC. Every week, participants in regulated U.S. futures markets are legally required to report their actual open interest positions. Our custom tool strips away swap dealers, asset managers, and commercial institutions to isolate the non-reportable positions category. This represents the small, speculative retail accounts, giving us an unadulterated look at exactly what contracts the retail crowd is holding. Before deploying this tool, you must follow two strict system rules to ensure the data renders accurately. First, because this data comes exclusively from audited futures exchanges, this indicator only works on futures markets. For example, in our next slides, we'll be looking at Euro FX futures under the symbol 6 times 10 to the power of 1. Second, the indicator only works correctly on the weekly time frame. Since the CFTC collects data throughout the week and publishes its audited report once every Friday, loading this on a daily or intraday time frame will display skewed statistics. Keep your terminal locked to the weekly scale. So how does the tool calculate and display this data? It uses a straightforward mathematical equation. Net position equals long contracts minus short contracts. The indicator plots this net value around a central zero balance axis. When the indicator line is positive and climbing, retail is net long, meaning they have deployed more cash to long contracts. When it falls below zero, they are net short. The real power of this analysis comes from spotting extreme contract overcommitments. When retail traders are excessively long, their collective buying power is exhausted, setting the stage for institutional reversals. One of the most powerful applications of our COT tool is comparing retail speculators with commercial traders. On the slide, you can see how our tool separates these two groups. The commercials, styled in blue, are the physical hedgers, commercial banks, and commodity producers. They hold physical assets and use futures strictly to hedge real business risks. They are the smart money that accumulates when assets are fundamentally cheap and sells when they are expensive. The retail speculators, styled in red, hold no underlying assets and trade purely to speculate on price changes. When you see these two forces heavily positioned directly against each other, with commercials aggressively buying and retail aggressively selling, it signals that the market is approaching a major structural pivot. Let's look at a prime historical example. On your screen is the weekly chart for Euro FX futures, referencing our exact TradingView snapshot. If you look at the lower indicator panel labeled COT Retail by FTB, you can see our red line plotting real money retail positions over time. Look at those major, multi-year price tops in the euro exchange rate. They align perfectly with instances where our red line reached peak bullish extremes. Retail traders committed their final dollars to buy the top, right before the smart money took the market lower. This is how you use real positions to avoid crowd traps. Now that you understand the background mechanics, the data source, and how to read the relationship between retail and commercials, it's time to jump into the practical application portion of the video. I'm going to share my live TradingView screen and show you exactly how to load this tool, configure your charts, and identify high-probability trading setups in real time. Let's head over to my live trading terminal. Hello everyone, and welcome back to Fundamental Toolbox. In this tutorial, I'm going to demonstrate how to use the COT Retail Positions Tool on TradingView, explain how to interpret it correctly, and show you why understanding futures market positioning can completely change the way you analyze financial markets. Let's get started. The first thing you need to know is that this indicator only works on regulated futures markets. That's because it uses the official commitment of traders, or COT, data published every week by the United States Commodity Futures Trading Commission, commonly known as the CFTC. The CFTC collects and publishes the actual positions held by different categories of participants trading on regulated U.S. futures exchanges. Since this information only exists for regulated futures markets, the Fundamental Toolbox tools can only be applied directly to futures charts. Now here's something that many traders don't realize. Although most people spend their time analyzing and trading Forex, CFDs, ETFs, stocks, options, cryptocurrencies, and other financial products, many of the world's most popular asset classes are either directly linked to or heavily influenced by their underlying futures markets. Institutional participants often use futures markets for hedging, price discovery, and managing large exposures. Because of this, futures markets provide a unique window into positioning that isn't available in most over-the-counter markets. This is why learning to analyze futures markets can provide valuable insight into what is happening beneath the surface. Throughout this channel, I'm going to teach you how to use futures fundamental analysis to understand what is driving the underlying market and then apply those insights across multiple asset classes, including Forex, CFDs, stocks, ETFs, commodities, indices, and more. Unlike conventional technical indicators, which are calculated entirely from historical price and volume data and therefore react to price movement, the Fundamental Toolbox indicators are built from independent fundamental datasets, such as the official CFTC commitment of traders' reports. Instead of simply measuring what price has already done, these tools help you understand how different market participants are positioned and provide additional context that can contribute to your overall market bias before large price moves develop. Therefore, with Fundamental Toolbox, you can truly forecast. For this demonstration, I'll be using the Euro FX futures chart. Make sure your chart is set to the weekly time frame. This is extremely important because the commitment of traders report is published once every week. Since the underlying data only changes weekly, the indicator should only be used on the weekly time frame. Now let's add the indicator to the chart. Click on the Indicators button at the top of TradingView and search for Fundamental Toolbox. You'll notice that my screen may look slightly different from yours. Because I'm the creator of these indicators, they appear under the My Scripts section in my TradingView account. However, on your account, once you've been granted access, you'll find them under the Invite Only Scripts section. Simply open Invite Only Scripts, select COT Retail Positions created by Fundamental Toolbox, and the indicator will be added to your chart. The indicator will appear in a separate panel beneath the price chart. When the indicator moves higher, it shows that retail traders are becoming increasingly bullish by increasing their net long exposure. When the indicator moves lower, it shows that retail traders are becoming increasingly bearish by increasing their net short exposure. Now let's look at the current reading. Notice that the COT Retail Positions indicator is currently showing an extreme bearish reading relative to its previous historical behavior. It is actually a multi-year bearish extreme. Historically, these extreme bearish readings have often occurred near important market lows, as retail traders are often wrong. This is consistent with the big failure rate of traders, so the Fundamental Toolbox members always trade against retail traders. At this point, we don't know exactly when price will reverse, and the indicator doesn't attempt to predict the exact timing of a move. As we continue moving forward through the chart, watch how price responds. Notice how the market eventually forms a significant bottom before beginning a major bullish rally. This demonstrates why monitoring retail positioning can add valuable context to your market analysis. Remember, the objective isn't to buy or sell simply because the indicator reaches an extreme. Instead, the indicator gives you an objective fundamental bias, bullish, bearish, or neutral. Once the fundamental bias is established, we use technical analysis to time the market with the proper risk management to build a more informed trading decision. If you want to learn how to analyze markets using institutional positioning, official CFTC data, and professional futures market fundamentals, and how to apply that knowledge to Forex, CFDs, stocks, ETFs, commodities, indices, and many other asset classes, make sure you subscribe to Fundamental Toolbox and stay tuned for the upcoming tutorials. If you'd like access to the COT Retail Positions Indicator and the complete Fundamental Toolbox suite of TradingView indicators, you'll find the links in the video description and the pinned comment below. Thank you for watching, and I'll see you in the next video.